The global economy is beginning to crack everywhere. But why? The largest mortgage lender in America just lost nearly half its value in a single day. 25 million Americans under 35 now live with their parents. Bitcoin's only positive catalyst was just crushed, as Congress just said that it's going to delay the Clarity Act bill passing until after the August recess. And the US dollar hegemony seems to be on its last leg. For the first time in 40 years, the United States imported zero oil from Saudi Arabia. And for the average listener, people think that all of these things are unrelated. They're all connected. Underneath of all of these different headlines is the exact same storyline. The cracks are beginning to show. Not just in Bitcoin, not just in stocks, not just in real estate, but in the financial system itself. And once you understand what connects all of these stories, Bitcoin starts to look a lot different. Today, I'm going to show you why Scott Bessent's interviews with Japanese reporters might be one of the most important interviews that you've never watched, and it explains where we're at in the current financial situation. I'm going to show you why the debt problem is much bigger than people realize, and why, despite all the chaos, Bitcoin may actually be getting stronger. This is Dante Cook with Bitcoin Simply. Let's go. All right, let's start here. This is one of the most important interviews in the world that nobody's talking about right now. A few Japanese reporters asked Scott Bessent why the U.S. intervened in the Japanese yen. And here's what he had to say.
So the first question is going to be, what was the primary objective behind the United States joining this historic coordinated intervention, and was it driven by the concerns over rising U.S. long-term interest rates?
Good to be with you. And the reason we did the joint intervention was as a symbol. The U.S. wanted to join with our great Japanese allies to show that we think that the Takaichi government has the right policies that will lead to long-term yen strengthening. And we believe that excess volatility and undue yen strength could hurt indeed the Asia region and the entire global economy.
So you briefly mentioned, but could a weaker yen and a stronger dollar have negative consequences for the U.S. economy?
Well, we have a strong dollar policy, but when I look back, only good thing about being 63 is I've been in the markets a long time, and I remember the Asian financial crisis in the mid-90s, and one of the triggers for that was substantial yen weakness. So because Japan is such an important country and also a large exporter of capital with large trade flows, large capital flows, it's important for the yen to maintain its value.
You have vast knowledge about Japanese economy history, and I would like to ask you about that. I think that the FEMA repo facility has been affected, but do you believe more fundamental changes in Japan's fiscal and monetary policies are still needed?
I believe that Abenomics has been a fantastic success. I went to Japan, I believe, first time in 1990. I've been more than 60 times and written extensively on Abenomics and Prime Minister Shinzo Abe. And I believe the past 14 years have been a success. And I think we're moving into a new phase, maybe Takaichi-nomics. And I believe that the Prime Minister understands that this is a less reflationary phase and that Japan has successfully lifted itself out of deflation and has one of the strongest economies in the world.
So the gap between U.S. and Japanese interest rates remain a major factor behind the yen's weakness. Considering the strength and resilience of Japanese economy, do you think the Bank of Japan should continue raising rates at its next meeting?
I'm not going to tell Governor Ueda how to manage the economy. I've known him for more than 15 years, since he was a professor at University of Tokyo, and I have great confidence in Governor Ueda.
Does it mean to light the rate hike in the meeting, BOJ meeting?
Again, I am sure that Governor Ueda will do what is best for the Japanese economy, and the Japanese economy is very important for the world economy.
So Japan's Ministry of Finance has described this as the completed form of a U.S.-Japan currency alliance. Do you share that view?
I think we are in close contact. I think the alliance stems from the good relationships between our leaders. President Trump and the Prime Minister have a very good relationship. He respects her, and we are great allies. As we have said many times, economic security is national security. National security is economic security. And I think Japan and the U.S. are both economic and military partners.
Just one quick question. Last meetings, after the last Fed meeting, there are long-term yields rose amid inflationary concerns. Do you think that the Fed should consider another rate hike this year?
I have great confidence in Fed Chair Warsh that he will effectively balance the dual mandate of employment and inflation. And I do believe that we are seeing, in terms of headline inflation, temporary headline inflation that's generated mostly by the energy shock. And the history of supply side shocks would tell you that they will work their way through the system. What we're seeing is core inflation remains quite under control.
So last really quick question. So even after the coordinated intervention, the yen's rally has remained limited. So what would you like to see from the Japanese Treasury and the Bank of Japan to achieve more fundamental resolve of yen weakness?
Intervention is a signaling mechanism, and the U.S. wanted to signal that we have confidence in the Japanese policies, so we will need to see follow-through from the Japanese policies. But I do believe that part of the inflation uptick in Japan was a result of the weak yen and also the energy prices. I think we will get to the other side of the Iranian conflict. Energy will come down, and then as we no longer have excess yen weakness, that will also contribute to inflation coming down, and that Japan and the yen can go into a virtuous cycle.
In your view, does the fact that that Japan is one of the largest holders of the U.S. dollar, did that factor in at any point?
What I'm more concerned about is the perception that the Japanese economy was overheating, and I think more importantly, for years, the JGB has been a global anchor for interest rates, and any perception that that anchor was being lost would be unhelpful or disorderly for markets. And I know that the MOF, BOJ, and U.S. Treasury are completely aligned that the JGBs are a very safe and sound asset.
Scott Bessent tells us that if one thing happens, well, it affects the entire system, meaning it's an unstable system. In the 90s, he worked for a guy named George Soros, who had a large trade on during the 1998 financial crisis, the Asian financial crisis. And this was the first time that the US intervened in the Japanese yen currency, because when the Japanese yen collapsed, well, it affected the entire market. And this just goes to show, when a debt problem pops up here, it's like whack-a-mole, and that another debt problem is going to show up somewhere else in the world. Because while the Japanese debt problem gets worse, there's also a debt problem emerging in the United States. The largest mortgage lender in America, United Wholesale Mortgage, just lost nearly half of its value in a single day. Why? They posted a $452 million net loss and had to raise $2 billion to cover up the hole in their balance sheet, the largest financing round ever for a mortgage lender. Mortgage lenders don't operate in isolation, especially if you're the biggest one. You just feel the impacts the worst. And I don't think this is the last company that's going to have these problems. It's just the first domino. This may seem unrelated, but I thought this was interesting. Let's take a look at Chipotle, who's been down 12% in the past week. This is one of the most consistent businesses in America. Through recessions, through inflation, people keep buying burritos. But the value proposition of getting a burrito the size of your head is now starting to crumble because of inflation. This really isn't about burritos. It's just a signpost for me that people are starting to change their behaviors. I'm going to skip a meal here. I'm not going to eat out tonight. Or maybe to afford life in general, I'm going to move into my parents' basement with 2 dogs.
I am 34 years old. I just moved back in with my parents for a few months with my 2 golden retrievers.
So this is the room.
This is the room.
And then this is the workspace.
This is my office. It looks
Wow.
terrible right now.
When you think about what you imagined for your life at 34, was it this?
No.
25 million Americans under the age of 35 are now living with their parents. Only 20% of Americans under 30 believe they can afford a home. The American dream is now moving back into your childhood bedroom and using your childhood dresser as a standing desk for remote work. Currency units have to continue to be created out of thin air in order to prop up the old debts and the old obligations from a system that you aren't a part of. But what happens is that obligation exports inflation to you at a future time and to your children. And this is the problem of the system. This is how they're all designed. This is how they all work. And there's only three ways out of these systems: default, inflate, or grow. And the United States government looks like we're just going to slowly devalue this currency to keep this game running for the next 10 or 15 years.
There's really three levers. There's the idea of defaulting on the debt, inflate the debt away, or grow your way out of debt. Which do you think is the most likely of those three?
Combination of inflate and grow your way out.
They're never going to default.
I mean, almost never. Any country that can print its own currency will rarely ever default. There are obviously developing countries that owe debt denominated in dollars.
Yeah.
And sometimes the polite word is restructuring. That's kind of the polite word for defaulting. It's not saying you're not going to get it back. It's saying we're going to shift the terms around that you're going to get it back. And so, that can default. Same thing with like the Eurozone. You can have bail-ins where, you thought you had money in the bank and now you have less money, but maybe you own shares of this now crippled bank, much diminished bank. So if the entity in question can't just unilaterally create its own currency, then default is an option, just like household debt, corporate debt. The main difference is that if you're a sovereign that prints its own currency,
why would you ever do that?
They rarely do. They almost never. And so instead, they debase their way out of it whenever they, if they ever have a trouble with a bond auction, whenever they have a repo spike, like 2019 or more recently, they expand the base money supply as needed. And so it defaults through purchasing power and inflation rather than through a nominal default. So in the U.S., for example, in World War II, the dollar was one of the least impaired currencies in the world.
This is the base thesis of how our entire financial system works. They're going to keep devaluing the currency, making life more expensive for you. You're going to be able to purchase less goods with more dollars. This is why Bitcoin matters. Despite everything you've heard about Bitcoin in the past week about it not being a safe place to store your money and store your value, the U.S. government has no way out of this system. And that's why Bitcoin is as relevant as ever. But before we go any further, let's get to our sponsors. Ledn allows you to be your own bank, to borrow against your Bitcoin stack without any capital gains, without selling your Bitcoin. All of the wealthiest people in the world have done this for years. They don't sell assets, they borrow against them. The same thing is true with Ledn. You can borrow up to 50% of the value of your Bitcoin that you post to the Ledn platform. Fiat gets into your account in less than 6 hours and there's no credit checks. Repay anytime, stay sovereign. Use the QR code to get started with Ledn. And one of the most important things about Bitcoin, about being a sovereign individual, is knowing how to protect yourself, your family, and others by running a private node, by managing your own keys, and how to do it properly and safely. The team at the Bitcoin Way will supply you with a coach to teach you exactly how to do this. Schedule a free 30-minute meeting with the team at thebitcoinway.com/partner/Dante-Cook. The US only has one option in order to prevent the entire system from collapsing all at once. When people see events happening in Iran or other places, they don't understand the true mechanics behind it. The real reason why the United States is in Iran is because it needs to protect the flow of dollars while simultaneously eliminating Iran from being a global superpower. A senior official from Iran said that they're going to pose 5 to 7% taxes or tariffs on boats passing through the Strait of Hormuz. If that were to happen, a 7% tax would generate $385 million per day, making the Iranian government more profitable than Apple and Nvidia. This would make them a serious threat. But you know what it also does? When they block the flow of ships and oil through the Strait of Hormuz, what actually happens is that they're blocking US dollars from circulating throughout the economy. When you look at this chart that the United States didn't import any Saudi Arabian oil, that's not the real issue. The United States is using Venezuelan oil right now. The real issue is this. When the oil stops flowing through the Strait of Hormuz, well, the oil is not being paid for in dollars. And when the dollar stops circulating, the United States government has to print. The Fed has been decreasing its balance sheet over the past several years, but they can no longer afford, with the different things happening in the world, to continue decreasing their balance sheet. they're going to have to intervene. They're going to have to print and create dollars. They're going to have to create liabilities that are then going to kick the can down the road and cause future inflation for future generations. The cycle keeps repeating and the system keeps circling on itself. They will have to print, and one of the biggest beneficiaries is going to be Bitcoin. They want a fixed supply asset that's globally relevant and non-sovereign. And this is the idea behind Bitcoin, a money that you can store that holds value, that you don't have to have trust in any other government, politician, or anyone else to hold. Saylor explains this in his recent interview with Stephen Bartlett. Information and money, code and money being the same thing.
The real profound breakthrough of Bitcoin is this idea that you can take economic energy, convert it to digital form, and tightly bind it to the person, the family, the company, but the country. We can talk about how we all hate countries, but the history of the world is all the weak countries getting smashed by all the big countries. So if what you're interested in is empowerment and fairness and equity for the small company, the small family, the small person, the small country, the weak, how do you do it? Well, you basically encrypt the money, put it in cyberspace, protect it with a private key. It's like now you can actually own something and someone more powerful than you can't take it away from you.
There's two types of money there in front of you. There's dollar bills, and then I've got a couple of Bitcoin on the table. What do you mean they can't take Bitcoin from you?
Okay, so this is a stack of currency. You walk through an airport on this, they ask you if you have cash. If you do, they just take it. Cash in a physical form is a problem. So what do? You put it in a bank. Well, the bank is a counterparty. So the bank then decides whether you get to keep it and whether you get it back. You go to the bank and you ask for it back. They might ask you why you asked for it back. If you ask for that much back, they file a form with the Treasury Department. If you ask for too much money back too soon, right, someone comes knocking on your door. So the challenge with this is fiat currency. And you hold this at the pleasure of the nation state. And not just your nation state, it's like every country on earth gets to decide whether you get to spend this stuff, right? Which is interesting. And if you want to actually transfer money to someone in another country, you need the permission of your bank, another bank, the central bank of their country, the correspondent bank. There might be 7 different banks that have to decide whether the money gets from here to there. So this is permissioned money, that's managed by the state. And with Bitcoin, I can take $1 million. I can actually encrypt it in a chip in a physical coin, the Cascacius coin. And that's $1 million. I slide it across and it's literally a bearer asset, and so that's one manifestation of it. But you could also put it into information form. I could transfer this to you just in the form of a private key that I wrote on a piece of paper.
So
and I gave to you.
A series of letters you could give me.
Yeah, or I could send you a message. I could send a text message. So good luck getting $1 million of gold from here to London if people don't want you to move it. But I could move $1 million of Bitcoin from here to anywhere in a few seconds. The idea was, I don't want to trust Apple or Google or Morgan Bank or a central bank or a government, right? And so in the extreme case, 2 people can meet in Africa and I can trade you some Bitcoin for your truck. And I don't need the permission of 7 banks and 16 governments and 32 other bureaucrats in order to buy that truck.
Despite everything that's happened the last week, Bitcoin continues to get stronger. There's been a team out there actively working, literally spending $10,000 a day on the same AI tools that were used to hack Bitcoin cold card wallets to defend Bitcoin. The Red Team has scanned 425 projects, finding 6,700 different bugs that they've reported to developers. Over 1,000 of them have been classified as very severe. So even through the calamity, the Bitcoin network is continuing to get stronger. It's an anti-fragile system that actually benefits from chaos. Today's episode wasn't about a mortgage lender, wasn't about the United States intervening in Japan's currency, wasn't about the Clarity Act not passing, it wasn't just about the United States not importing any oil from Saudi Arabia. It's that the cracks are showing everywhere because the global system has reached its mathematical debt limitations. And when that happens, governments don't take the hard path. They don't allow natural consequences to happen. They print, they intervene, they inflate. That's why Bitcoin is still as relevant as ever. Bitcoin wasn't created for times of stability. It was created for times like these. Maybe that's why Bitcoin keeps surviving. Maybe that's why it keeps getting stronger. And maybe that's why, just maybe, its best times are ahead. And this is why I continue to stack. By buying Bitcoin through exchanges, through dollar cost averaging every day, or through buying Bitcoin through partners like SAS Mining, the leader in Bitcoin mining. You give them your money, they send you sats directly to your wallet. Not only that, Bitcoin mining has tremendous tax benefits through the big Bitcoin bill. If you don't know what a Section 179D is, or being able to depreciate assets, speak to a tax advisor. But it's powerful. And you get to acquire the most valuable, scarce form of currency that we're going to have for the next 100 years. Use the QR code to get started with SAS Mining today. And if you haven't already done so, subscribe to the channel. We'll drop fire news like this 7 days a week. This is Dante Coco Bitcoin Simply. Happy stacking.